Okay, so what happens if you're not able to pay off that credit card? Or let's say, as we were just saying, that for the last few years, it's not that easy to do the true burr method. When you pull out all of your cash, you still have to park some cash in the deal.
Yep.
And now, let's say you're, I don't know, $20,000 short because you have to keep it in the deal. What do you do with that credit card? So what is the main difference between the business credit card and a line of credit? And is there any difference in how you would qualify a person to get one or the other?
Yeah, great question. So I'll start with the line of credit. The line of credit, it comes with a checkbook. So that's why I compare it to the HELOC. We're approved for a certain dollar amount. And essentially anything we need to use capital for, we cut a check and go put it to use. So that's the biggest difference in terms of how we use it. One comes with a checkbook. The other's a piece of plastic that we can swipe, we can liquidate, we can get creative with. The real difference is in the...
Okay, hi, and welcome back to the Philly Landlord Guy. I'm your host, Yuri Skripnichenko, the guy with crazy last name. Just think of me as the Philly Landlord Guy. And today we're talking about the key to scaling your Philadelphia real estate portfolio with smart financing. So many investors, especially new landlords in Philadelphia, are focusing on finding the right deals, but most landlords rely solely on their own finances and personal cash to shoulder that down payment or the funds that you need to close the deal and do the renovations. Therefore, today we are bringing in Nick from MB Capital Solutions to teach us how to open up entirely new funding channels using business lines of credits and business credit cards. He will show you how to structure your business financing so you can find your rehabs, covering earnest money and bridging the gaps in funding, all without sacrificing your personal capital. So let's jump right in it and unlock the secrets of business credit. Nick, welcome to the podcast. And if you can introduce yourself and tell us a little bit more who you are, what you do, and how you got into all of this real estate financing.
Yeah, no, listen, I appreciate you having me. My name is Nick DiFederico. I'm partner and lead funding strategist with MB Capital Solutions. MB Capital Solutions helps real estate investors, landlords, small business owners really build up access to working capital, right? As entrepreneurs and real estate investors, we always need cash. So that's how we help our clients. We help build up capital in the business name that as you're out there looking for deals and you need down payment money or working capital, rehab funds, kind of have a tool in your toolbox to be able to go to. So we specialize in unsecured funding, which essentially is just leveraging personal credit to go get funds in the business name that, again, we can go out there and use for whatever we want. So we're big about building investors with opportunity money. I hear it every day. Investors are missing out on deals. Maybe they don't have enough cash or they don't have the down payment money to combine with a hard money lender to get into a deal. I hate hearing that. So it's our goal to make sure that every client has at least access in the business name so that they can get into deals and go take advantage of opportunities.
Do you invest yourself?
Yes, I'm an investor as well. I do the BRRRR method, the buy it, rehab it, rent it out, refinance, repeat that process. I'm BRRRRing in the Philadelphia market as well. I'm up to 12 rentals, always looking for that next deal. I'm very particular. I like to do a true BRRRR where I can pull all my money back out when I do that refinance. It's definitely a little bit harder these days.
Yeah, I can imagine for the last, I would say 3 years, it's not that easy.
It's definitely not that easy. I'm okay with leaving money in the deal if it makes sense, but yeah, I'm an old school BRRRR who, those first few, it was a beautiful thing getting all your money back when you do that refinance. So I'm kind of stuck in that, looking for that unicorn these days in the Philly market.
What areas are you looking at?
Mostly Northeast Philly. I grew up in Northeast Philly. So most of my properties are 19135.
Okay.
So that Tarsdale, Harbison area. But then I'll go into far Northeast as well. Anywhere where I can go up into get close to the suburbs. That's where I grew up. Bustleton, went to George Washington High School. So When I started to invest, I kind of went back to the old neighborhood, because I knew the market.
I actually used to live right across the street from the school when I just moved into the country, and yeah, it was fun times.
Fun times.
But actually, for 19135, we just released an piece last month or a couple of weeks ago on the stats for that. And from all of the Northeast Philly neighborhoods, that's actually this year, that neighborhood performs the best in terms of cash and cash return or just cash flow.
Yeah.
Maybe the rents are not as high. Maybe your tenant base is not the same as you would get at Bustleton. Right. But at the same time, you still can get a deal and you still get it cash flowing. So tell me a little bit more about this cash building process, that what you called it for investors. What does it mean?
Yeah, so essentially we're building you up with business capital, right? Access to cash that we can use, when we have a property under contract. So a lot of what we're doing are, the checkbook lines of credit, almost like a HELOC. The only difference is we're not collateralizing the property. Most of the banks, lenders, they're looking at strength of personal credit profile. They're looking at the age of your business, and they're going to give us money based off of those two factors. A lot of what we've been doing is, really just building you up with access. We're big on having opportunity money, because like I mentioned, I hate when I hear investors say they missed out on an opportunity because they didn't have 20 or 30 grand to put down to combine with a hard money lender. So, we work with lenders nationwide. We are a nationwide business. 90% of our clients are real estate investors all across the country. So it's kind of our niche market. We know the investor, we know buy and holds, we know fix and flips, all the new fancy stuff that's going on out there, gator lending, private lending. So, the one thing I love about real estate is there's always ways to make money, especially when you have the access to it. So our goal, like I said, let's build you up with that capital. We'll get you lines of credit. We do a lot of the strategic 0% credit card plans. I don't know if you've ever heard about using a credit card to purchase a property, but we show clients how to do it on a daily basis. And it just shows you that creative financing and different ways to structure yourself or have tools in the toolbox, like I say, can lead you to deals. We all have a funding toolbox, whether we know it or not. We all have tools at our disposal that we can use, whether it's hard money, private money, commercial loans, credit cards. I preach having all of it. The more tools you have in your toolbox, the more deals you can find, the more opportunity you can go out there and take advantage of. At the end of the day, that's the name of the game.
Okay. And how do you use a credit card to buy a property?
Oh, great question. So there's a couple different ways, right? I always say you don't think of a credit card as a credit card. I mean, you can use it as a credit card, right? Like if you're swiping and buying materials or paying invoices, contractors. But more importantly for us as real estate investors, there's actually 3 to 4 different ways that we can liquidate a credit card into cash, go put cash in the bank account without doing those crazy cash advances. So if you're watching this and you're like, hey, I do cash advances and pull cash off of credit cards, stop. It's crazy. Don't pay 30, 40% interest. There's actually ways you can liquidate a credit card into cash and keep it at 0% interest for the life of a promotion. And then my number one way to use a credit card to purchase real estate, we do use a third-party company that can actually pull funds off of the credit cards and wire directly to the title company. So, think of that power, right? Think of using a 0% credit card where, you have a hard money lender that's giving you 80, 85% of the purchase and all the rehab funds. Essentially, you can 100% fund your deal leveraging a 0% credit card to fill in the gaps. This way you can hold on to cash, get into a deal fully leveraged, but most importantly, keep your interest rate on the leverage that you're using low. That's why 0% credit cards have become so popular recently, because one, it's 0%, can't beat that interest. But when you know how to use a credit card the right way, it is a game-changing tool, especially for newer investors that are just getting into the game that don't have a track record, don't have the business, time in business or docs or anything like that. With good personal credit and an LLC setup, there's ways for us to go get 0% credit cards to use to fund our deals.
So how does it work? Let's say I do this BRRRR method, right? And I have a lender who would lend me I don't know, 90% on the purchase and 100% on rehab, but I still have to from this 10% to buy the house. Now you're telling me that I can get the 0% credit card and use this 10% off of credit card, but then once I'm done with my deal, I want to go and refinance. But if I use the credit card, it's going to be on my credit report now, and the bank will look at it and it's like, why I have such a high balance? We're not going to do it for you.
Exactly. What we want to do is avoid that. So what's nice about the business credit cards is even though the lender's looking at personal credit, they're issuing it under the business entity name, under that EIN number. So you can actually go out there and leverage all of it and not have to worry about it reporting on personal credit. I use myself as an example. Right now, I'm using a little over 150 grand of business lines of credit and business credit cards. Not $1 of that reports on my personal credit report. So on the back end of my BRRRR, when they go to pull credit and they look at personal credit, they're not seeing all the leverage that I'm using in the business name. So credit score still looks good. I still get bets, rates, terms, even though I'm leveraging a boatload of money in the business name. Because once I get that refinance money, it's going towards paying down the credit cards and the lines of credit anyway.
Okay, so what happens if you're not able to pay off that credit card? Or let's say, as we were just saying, that for the last few years, it's not that easy to do the true BRRRR method. When you pull out all of your cash, you still have to park some cash in the deal.
Yep.
And now, let's say you're, I don't know, $20,000 short because you have to keep it in the deal. What do you do with that credit card?
Yeah, so one, I always tell clients, make sure we know our full game plan, not just how to get into the deal, but our exit strategy as well. You'd be surprised how many people want to do a BRRRR, but they're not even looking at terms on the refinance. So they're not really properly running their numbers on their deal. But I do see it all the time now. Like we mentioned, people still have to leave a little bit of money in the deal because you're not getting every single dollar back. The question really becomes looking at your deal, knowing the cash flow. What does your monthly payment become on the credit cards based on how much you're leaving on the card? While it's at 0%, your minimum monthly payment is going to be 1% of whatever the balance is. So if we're leaving, say, 20 grand on 0% money, well, we're going to have to service that with the $200 payment every month. So you got to look at, all right, what's the cash flow of the property? Can I service the credit card based on how much I'm leaving in the deal still? And hopefully we're pulling enough out to pay it down, but definitely seeing it more and more lately, obviously, with, needing to leave a little bit more money in the deal. But that all comes back to running your numbers on your deal. All right, how much are you renting the property for? What's it cash flowing? Can you service the mortgage and holding any of the money that may be left over? That's kind of what we're preaching to clients. Make sure you know your exit strategy on the deal. Make sure you know what your refinance numbers are going to look like so that you can properly game plan, what tool you're using in the toolbox to make sure everything's getting paid back when it's all done.
And what do you need to have to be able to get that credit card?
Mostly it's personal credit based, right? Now you're going to say, what's my score need to be? I care more about your credit data than just your score, right? Most people say, no, what's the score got to be? You got to be around a 700. But the truth is, one thing about us, it's not, hey, you're approved or denied, or we can get you money or we can't. It's, hey, this is what you look like right now. We can get you X amount of money based on the way you look right now. Or we'll also give you a game plan on ways to improve credit so that we can go get you more money. Most lenders, again, they're not just looking at that 3-digit score. They are looking at, how many inquiries have you had in the last 6 months? What's our utilization? How much time have we had credit? So that's really where we come into play. We're going to take a look at a credit profile, see how you're currently positioned. And if there's ways to improve it to make you a little bit more bankable and lendable, give you that game plan as well. Because we're all real estate investors. We're all using credit in some form or fashion. So, if we're out there and we're having credit ran a lot for refinances or we're getting terms, maybe we have to remove inquiries. Maybe we have old late payments or bad stuff. We have the resources that can help clean up credit as well. So regardless of what you look like, there's always a game plan for us to create for a client to be able to help them get in a position to go get funding. But majority of it is based off of personal credit. They're going to look at personal credit because it's unsecured, right? We're not collateralizing it with an asset. We're not putting liens on property. We're personally guaranteeing it. So that's why lenders are looking mostly at personal credit to give us the money.
Can you explain a little bit more about the difference? What does it mean when it's there is a collateral, or if you personal guarantee something? What does it mean for a person?
Yeah, so I'll use, like I mentioned a little bit ago, a HELOC, right? You go get a HELOC, lender is going to give you X amount of dollars based on the equity that you have in the property, but you're now putting a second lien on the property for the HELOC. Whereas with an unsecured line of credit, we're personally guaranteeing it, much like we do a credit card, right? You apply for a personal credit card, you're personally guaranteeing it. The difference is we're not collateralizing the asset. So we're not putting a lien on your property. You're not putting a lien on any cars or gold or crypto or anything like that. We're not leveraging anything. Essentially, we're just leveraging the strength of our personal credit score and our credit profile to get the money. Whereas with that more collateralized type product, we are putting something at risk, right? We are putting a lien on our property or an asset to be able to get those funds. So essentially, we're just leveraging personal credit and not, touching any of the assets that you may have that down the line you may be able to use to get another type of product. Listen, if we can get a HELOC, great. But if we can go unsecured as well, we might as well get both.
Okay, and for the personal credit profile, if you're not looking that much at the score, but you're looking at the background or what was happening with the credit, how long are you looking to have that credit file for? Like, are you looking for 5 years, or you need to have 3 years? What is that length of the credit history?
Most lenders want to see in that 5 to 7 year range at least. That being said, we meet a lot of investors that maybe didn't build credit, or like I say, they're just young. They're babies in the game, 19, 20, 21-year-olds trying to hustle, get into real estate. They haven't built credit yet. So most of the time, lenders do want to see in that 5 to 7 year range. But in terms of being the strategist and helping kind of game plan, like I had a client yesterday, he's a fetus, he just turned 18, trying to invest, needs money. But we need to bump up the age of his credit history to show something. So we're actually having him get added to his dad's credit card because the dad has a substantial credit history. And by getting added to an authorized user on their credit card, now that history transfers over to his son. So even though the son's going to be 18 years old, he'll have 18, 19 years of credit history just by getting added to that authorized user on the credit card. So there's always ways to manipulate credit, as I like to say. But if we're just looking, ideal, most lenders want to see that you've, built and maintained credit for at least the last 5 to 7 years.
So let me give you another example out of my personal life. So when I moved to the country, right, and I was young, not that young, but I was younger, and I didn't have, obviously I didn't have any credit history. I didn't have any credit cards. I didn't have a father who had credit card to give me either. Yeah. So I had to build it from the beginning. And people like me and you would not lend me money. They would not rent me anything because I didn't have credit history. I didn't have proof of income. So it was a little bit more complicated for me at that time.
Yeah.
Let's say if somebody is in those shoes, they're new to the country, or they never had any credit. They don't have a family who would put them on the credit card history. Or let's say they have a friend who would add them to their credit card.
Yeah.
Would you be able to lend to them? Or you still have to have some kind of credit history or length of...
It will definitely help. There's clients where we're completely honest. Like, hey, we may have to build up a little personal credit before we get the business money. If we don't have somebody willing to add you as an authorized user, we'll help build from the scratch, right? We do it all the time, especially like you mentioned, somebody coming to the country, they're just getting started, they're looking to build, they don't have that credit profile. There is ways to smartly build your credit. There's certain lenders you want to add to your credit profile. A lot of lenders right now, we need to get the personal product to get the business product anyway. So we can game plan that with the client, right? We see it all the time. Hey, I have nobody willing to add me as authorized user. Okay, then we got to go smartly build trade lines on our personal credit profile. We also have to go use the money on the personal credit profile, right? Like that's what most people don't think or don't understand is just having credit cards on your credit profile isn't really just building credit. Lenders want to see you go out there and use the money and be responsible enough to pay it back as well. So I have a client right now where we're kind of doing that, right? Young, no history, Nobody willing to add him as an authorized user. We've built up some personal credit cards for him. He's out there leveraging them now, like gas, lunch, just showing activity on it. But most importantly, I'm telling him not to pay it down after 30 days. Because most people, all right, let me use credit cards and I'll pay it down real quick. But if it doesn't report on your credit with a balance, you're not getting the credit for it technically. So I'm telling most clients when we're building, all right, get a balance, but don't be so fast to pay it down in the first month. Let it go a month, let it go 2 months, and then you pay it down. Because now what you're seeing is lenders are looking at that and saying, all right, you already just used his credit cards. There's a part on our credit report that shows what our high past balance is. So if we can use 5, 6, 7 grand of credit card debt, or leverage as I like to call it, but be responsible enough to pay it back down without getting any of the late payments, well, now we're starting to look good in the bank's eyes. So for those clients, yeah, it may not be a sprint, maybe a little bit more of a marathon, but we're going to give them the right game plan to be able to do it the right way so that at some point down the line, we can go get them hundreds, 150, 200 grand worth of business capital. We just may have to make sure personal credit looks the right way first.
Okay. So what is the main difference between the business credit card and the line of credit? And is there any difference in how you would qualify a person to get one or the other?
Yeah, great question. So I'll start with the line of credit. The line of credit, it comes with a checkbook. So that's why I compare it to the HELOC. We're approved for a certain dollar amount. And essentially anything we need to use capital for, we cut a check and go put it to use. So that's the biggest difference in terms of how we use it. One comes with a checkbook. The other is a piece of plastic that we can swipe, we can liquidate, we can get creative with. The real difference is in the interest rates, right? The line of credit, obviously it's not going to be 0%. So the lines of credit, what we're seeing right now for most lenders, prime plus 1 to 5%, depending on credit profile. So prime right now is at 7.25%. So we're seeing anywhere from 8.25% on the low end, 12.25% on the high end with the lines of credit. Interest-only payments, though, so it doesn't crush us cash flow-wise while we're using it, but we are paying interest on it right off the bat. Whereas with the credit cards, anywhere from 12 to 21 months, we have it at 0% interest. And the reason I like the credit cards is for us as real estate investors, ideally, we're not using it for bad debt. Right? We're putting it into a deal where we have an exit strategy. So when we can go use it, and whether we're flipping a property or if we are refinancing and pulling the cash back out, when we pay those cards down to 0, right now, 50, 60% of those lenders are instantly sending us another 0% promotion to tap into and use. People watching this may see it sometimes on their personal cards. You transfer a balance from one card to another, and then that first card sends you another 0% promotion to try and get you to use it again. It's the same thing on the business side. And really, credit card companies do that for 2 reasons. One, they're a credit card company. They need to hold your debt. It looks good on their balance sheet. But the real reason why they issue the 0% promotions, they know statistically speaking, over 90% of people that use 0% promotions typically can't and won't ever pay it off. Because usually they're moving over bad debt. They're just racking up more bad debt. But for us, as real estate investors, like I said, where we have that exit strategy, when we pay it down, the lender sees, all right, you already just used a 0% promotion, was responsible enough to pay it down. Let's give him another one, because odds are that Yuri's not going to be able to pay it off next time. But they don't know that Yuri's using it into a deal where he has that exit strategy. So me personally, over the last 8, 9 years, I have some credit cards I've never paid interest on, because I've either refinanced, paid it off, or I used one of my other tools in the toolbox, my line of credit or a 0% credit card, and just transferred any other balances around to just kind of reset it. So there's always a way where we can get creative in resetting 0%. But that's the main difference between the line of credit and the credit cards is the interest rate. You're going to pay, anywhere from that 8 to 12% on the line of credit right off the bat as you're using it. With the credit cards, you're paying 0% anywhere from 12 to 21 months. And then the checkbook versus the swipe, the big 2 differences. Now, being able to acquire them, 2 different things. For the lines of credit, most banks want to see at least 2 years in business, right? They want to see 2 years from your incorporation date. Whereas with the credit cards, we can literally be a day-old LLC. As long as personal credit looks right, they're going to give us money. So that's why we get a lot of real estate investors who are like, hey, I just opened up a new LLC. Go get me another 7,500 grand of 0% credit cards, because it's a no-brainer. With the lines of credit, they've definitely become tighter over the last 9 months, I want to say. With everything going on economically, tariffs, government shutdowns, wars, lenders have definitely tightened up on the checkbook lines of credit. So we are seeing more lenders asking for docs. If this was a year ago, 18 months ago, we could pretty much go into a handful of banks and go get 50 to 100 grand with good personal credit and no tax returns. That is starting to change. The days as a real estate investor just walking into a bank and getting 50 grand on a line of credit and walking out in 20 minutes, not happening. So we are seeing more lenders, kind of want to see a relationship first. So that's where our planning comes into play. One thing about us, we're working with lenders nationwide, so we kind of know what their box looks like and what happened for you to fit in that box. And that's been the biggest change, is just learning what the lenders are doing, learning how they switch things up. But we've got a good handle on the pulse. We work with a lot of direct reps at banks, so we can really position you to be able to go get that money.
So what do you see when you apply for a credit card as a new business? Let's say, as you gave an example, I have a one-day new LLC and I go ahead and apply for a business card, leveraging my personal credit history. What do you see the approval amount? Like, what is that line?
So it all depends on the exact footprint of the credit profile. I always say a credit profile is like a snowflake. You can have 100, 800 credit scores. They're going to all look different. Average round of funding when we're doing 0% credit cards, clients are getting 68,000 within the first 21 days. Better profiles getting more than that. Like we mentioned, a little bit of the lighter, maybe younger profiles coming in a little bit under. Average clients getting about 68,000 right now based on current trends. But we had a client last week got 135,000, brand new LLC, just had strong personal credit. Everything was issued under the business name, which was a beautiful thing. Now he has 135 grand of working capital to go out there and combine with a hard money lender to get into his first deal.
Okay. Before we move on, I would like to take a quick break to thank our sponsor, TrustArt Realty. If you're a landlord in Philadelphia, you know that managing rentals, staying compliant, and finding quality tenants is complicated work, especially now when we have so many new laws coming our ways. That's why TrustArt Realty is offering our listeners a free rental analysis or a management advice session. Whether you're juggling repairs or struggling for your next acquisition, they've got you covered. To claim your free consultation, email us at trustartrealty@philalandlordguy.com or go to trustartrealty.com and click on schedule the consultation, and somebody will get in touch with you. Is it $135,000 spread between a few different credit cards, or it's just
he was 5 credit cards? So he was 5 total credit cards. Everybody's game plan varies, but on average, we're doing 4 to 5, credit cards and a round of funding. Where again, most clients are getting that $68,000 average, but most clients in that 75 to 100K range worth of capital.
Okay. Do you have any recommendations or favorite tools or on how to get track of all of this? So when you have, even if you have just your first LLC, it's 1 day old, and now all of a sudden you get 5 business credit cards, and you have a line of credit, and you have your personal bank that is attached, or maybe business bank, and now you have a hard money lender loan on it. How do you track of all of that? When you need to make a payment, when you need to transfer money? Any recommendations there?
So definitely have tips, and we definitely have tools to use to help. We set all of our clients up with what we call a credit card management sheet. So essentially all your credit cards in one place. We kind of populate it for you when you go through a round of funding. So your personal cards, your business cards, lines of credit will all be there on one page. When the due dates are, when the 0% offers expire. That helps me personally when I'm working with a client, because if 6, 9, 12 months down the line, we're trying to help them either re-engage promotions or help them maneuver things around, I'll always say, come back to your credit card management sheet. So the credit card management sheet makes it very easy to see everything all in one place. In terms of like managing the payments, I'll just speak from personal experience and what I tell every client that I do, right? Like between me and my wife and multiple LLCs, we have 47 different credit cards and lines of credit that we use, right? And that's over $700,000 worth of access between those. It probably takes me 10 minutes a month to manage it all. You know, what I personally do is I have one checking account where all those payments debit from. And I just look at my credit card management sheet and I'm like, all right, every month I need to have X amount of dollars going towards servicing debt. I just put that money in that bank account at the beginning of the month. Everything's set on auto pay. And literally halfway through the month, I just make sure everything's debiting. So there's lots of ways that can make it very easy. You may hear that I have 47 credit cards and you're like, holy crap, that's way too many. It is if you're using all of them at once. But as long as you have the process in place and you have the tools like we talk about, it's really not that overwhelming. You know, if you kind of set yourself up where you have that one checking account where it all auto pays, it makes your life super easy.
What happens with those credit cards? So you have 47 of them and you're obviously not using all of them at the same time. So let's say you're using 5 and you have 42 sitting there. Are they getting close? Do you have to use them, or are they getting reported to your business profile? Like what is happening?
Yeah, so great question. A lot of them, if you're going 2-3 years not using them, they may start to close them or cut your limits. So I'm constantly rotating the few that I'm using, so that I'm showing activity on all of them. And that's between personal and business and multiple LLCs, me and my wife. So some of the personal cards we're using for family and, daycare and all that stuff. So they get used. But I'll rotate the business cards just to show activity on all of them. Even if it's go get gas, right? You want to just show activity on the card so lenders see that you're using it. But yeah, if we're not using it, it's not going to go away unless we start having late payments or defaulting on the money. If any of the bad stuff starts happening, that's what we want to avoid. But that's part of working with us. We're going to make it super easy to hold your hand. Any client that ever runs into an issue, we're going to, kind of give them that guidance on how to make sure that you don't hit the bad things that we see other clients have.
And what do you see? What are the common pitfalls that a regular investor get denied for when they apply?
In terms of denials, 2 things. One, too many inquiries, right? We talk about it all the time. For a lot of things, inquiries don't matter. If you're going to go get an auto loan or even a hard money loan, they don't really care that much about inquiries. But for what we do, lenders do put a little bit more emphasis on inquiries because, again, we're not securing the capital with anything, right? We're not collateralizing it with anything. So even though you may have, like I had a client a couple of days ago, he's got a 770 credit score. He's got 14 inquiries in the last 6 months. Lenders see that and they start to wonder, all right, what's going on in the financial life that maybe hasn't hit personal credit yet, right? Like this guy's having his credit ran so much. Is he trying to get loans? Is he trying to get credit cards? Did he lose his job? Even though credit still looks good, he's having his credit pulled too much. Instant denial. That's what we've been seeing in the last 6 to 9 months. Anything over the 3 to 4 inquiries in the last 6 months, typically we're going to recommend removing inquiries, right? Inquiries will stay on your credit profile for up to 2 years, but you do not have to wait 2 years for them to fall off. We have a resource that we use where, pretty much we send all clients to him. And I don't know what he does. I don't know if he's got a girlfriend at the credit bureaus or whatever, but he gets those inquiries removed pretty fast. So there's always ways to get inquiries removed as long as they're not tied to an open trade line on the personal side. That's the number one thing I see that we need to maneuver around is, all right, we got too many inquiries. We got to clean them up so that you look a little bit more favorable to the lenders.
So how many is too many?
More than 4 in the last 6 months, I'm going to recommend we remove inquiries. It's just one of those things with lenders right now. And I see it all the time with real estate investors. Like I mentioned, we're getting terms on hard money and refis and all that stuff. You still got to operate. That's the most common. If we're going to position you the right way and kind of set you up for success, we'll definitely recommend removing inquiries, which is a couple $100 to do. It's not like it's a crazy expense. But if we remove inquiries and it opens us up to go get you 100, 150 grand, not a bad trade-off.
Okay. So I assume there is a cost involved in removing those inquiries, right?
Yeah. So it's not, again, it's a resource that we use. I believe he's $300 for him to remove the inquiries. But he'll clean up those inquiries, get them all removed, send you back to us nice and clean how we want you to look, and then we go get you the money.
Okay. So when you get the funding to your investors, what are the three most common ways that they're getting used besides buying the property?
Right. You need that down payment plus closing cost money. That I want to say is probably 75% of our clients. You know, they have a deal, hard money's given them 80% and then all the rehab, but they need that 20% down plus closing cost. Let's leverage the lines of credit and 0% credit cards. Even if you have cash, show your hard money lender the cash, but then use the credit cards to get the funds to the table. That's the most common. Other ways clients are using it, you know, rehab, you know, use the cards as the rehab money. It limits how much you're taking on a draw from the hard money lender, how much you're paying on rehab points and interest. So it can actually save you some money if you have the rehab funds ahead of time. Another thing I see all the time, I get probably one call a week from somebody who just closed on a loan and didn't realize they had to kick off the rehab before they got the first draw. It happens every week. People close on a deal and they're like, hey, I didn't know I needed the first 10 or 15, 20 grand to get the contractor going before that hard money lender gives me my first disbursement. So make sure you're checking with your hard money lender and you know when you're getting your first check for the rehab, because you may have to front that first 10, 15, 20 grand. More popular way that we've been seeing people use it is they've been private lending with the money. You know, I hear all the time clients saying, hey, I can't find a deal. I can't find a deal. The real smart, savvy ones are actually going and taking the money that we're getting for them and lending it to somebody else on their deal, right? So, I mean, we all know Pace Morby talks about gator lending. You know, if we're not familiar with gator lending is more for like wholesalers where you need EMD money. Right, a lot of wholesalers are getting properties under contract, and they need to put 3, 4, 5 grand down on each of those properties. A lot of wholesalers are running out of money doing that if they're getting enough under contract in a given month. So they're actually taking gator loans from other investors. Hey, I need 5 grand, Yuri, for this deal that I'm putting under contract. When I sell it in 30 days, I'll give you back 10. There's people out there making a killing right now just private lending. And gator lending in general is just using a 0% credit card to fund somebody else's down payment, EMD, where you're going to take a piece of their deal.
That's interesting. I haven't heard about that before.
Yeah, gator lending. Pace Morby, he's got a whole program, you know, dedicated to gator lending, showing you how to go out there and invest on other people's deals. And we've teamed up with the, you know, Pace's community. We've helped a lot of their students get access to funds, not only to get into deals on their own, but for that exact reason. Right? You know, maybe they can't find a deal, but hey, if I got 20 grand on a 0% credit card and somebody needs 5 and they're going to give me back 10 in 30 days, I'll do that deal all day long. So you can always get creative. You know, I always tell people, if you can't find a deal, go find somebody who is finding deals that maybe need money and find a way to go make some profit.
Okay. So on the opposite side of that, what is the major red flag or red flags that you see when people maybe misapply the funds or misuse the funds?
Yes. Well, the number one I see is people not knowing what a deal is. You know, there's a lot of investors out there that they've got itchy fingers and put in lots of offers. And when they get one accepted, they're excited. But is it or is it not a deal? Right? Like the number one thing I see people, like, what's your exit strategy? Right? Like if you're holding it, make sure you know the numbers on your refinance. Make sure you know what your loan to value is going to be on the back end, how much you're leaving into the deal. If it's a flip, great, but just know your numbers on the flip so you know that how much money you're making on the profit. That's the number one thing I see is people try to get into deals that I would never do in a million years. And I'm not one to tell you not to do the deal, but I will recommend, hey, maybe make sure that you're looking at this fully, because a lot of times one miscue or one overage One mistake on the job site could cost you your profit and then put you in the hole. That's the number one thing I see, not just in using the funding, but in investors pretty much in general. A lot of newbie investors want to get into that first deal or get into a deal, or they think it's a deal and it's not actually a deal. So always be diligent on running your numbers, making sure you know your exit strategy, and build in that worst case scenario.
Okay. So all of this sounds like those products, they geared towards newer investors or who's just getting started or getting into the game. Would this work for a seasoned investor or somebody who already has a few rentals? How would they leverage the funds?
Yeah, definitely. I mean, our experienced investors are coming to us for 0% money on the credit cards, but then also as the business is starting to grow and age, at that point, maybe you have rental income. We're showing tax returns. We're actually making the rental business a real business. At that point, we can start to look at more of the checkbook lines of credit, larger lines of credit. We have a couple lenders right now doing business term loans. I had a client last week where, based off of a 2-year-old business with tax returns, they gave him a $500,000 term loan. 15-year term loan, basically just drop cash right into his bank account, and now he can go do deals with it. So there's always ways for us to find money based on where you're at. But most experienced investors, believe it or not, they're still coming back to me for 0% money years later, because at the end of the day, you can't beat 0% interest. I always point out that even if you're using the 10% lines of credit or using a 10% hard money lender or 15% private money loan, if you can add in a lot of the 0% money, well, now your blended interest rate is actually coming down on the money that you're leveraging, which is just putting money into your pocket. Because if I can go use 50 grand on a line of credit, even if it's 12%, but now I'm using another 50 grand of 0% credit card money, well, now I'm really using 100 grand at a blended interest rate of 6%. You can't go borrow 100 grand from any bank in the country right now under prime. So I like using the tools in conjunction with one another because it allows you to get creative and lowering your blended interest rate on the money that you're using.
So how does it work? You mentioned that when, let's say, somebody with good profile comes to you and they can get approved for $135,000 in business credit cards, and it's across 5 credit cards. But if you're applying for 5 different business credit cards, you will get 5 different inquiries on your credit profile.
Yeah.
And you just told me that 4, it's maybe already too many. And besides that, you will have your hard money, you will have your refinance, you probably from the previous deals that you just made.
Yep.
The last 2 years, you have at least, 4 inquiries for each single deal that you do.
Yeah.
How does it all work?
Well, one of the nice things about the credit cards, one, they're not doing tri-merge pulls, right? So they're only pulling one of the 3 credit bureaus. So if we apply to 5 credit cards, it doesn't mean you have 5 inquiries on each credit bureau now. One of the things that we do is, because we're running 100 applications every month, is we're following the trends of the lenders, right? Who's pulling what credit bureau? When are they pulling it? What's the average approval amount? So the one thing we're not doing is going out and shopping, right? Like your credit's not just getting ran 10 times and we're just applying to the same lenders. So we'll strategically spread the inquiries out across the 3 bureaus. That being said, if we need to remove inquiries, we can always go back and do that. Because again, especially with the business credit cards that are not going to show up on personal credit, those inquiries can get deleted pretty quickly, because when we go to the credit bureau, it's not tied to an open trade line on the personal credit. So if we can just make sure inquiries are clean when we do our thing, it really shouldn't impact you on the hard money loan aspect, the refinance, if you're doing DSCR or anything like that. But we won't kill a client with inquiries. But if we can clean inquiries up and get you in a position where we can go get you that 100 and 150 grand, yeah, we may add a couple of inquiries to get in the money, but it's not a bad trade-off. Worst case scenario, we just get the inquiries removed after we do the round of funding. Every client's a little bit different on what they end up looking like after the round of funding. Makes
sense. So, Nick, it was a lot of different information, and my brain is about to blow up. But what is there something that I didn't ask you about, but you really wanted to let us know?
Nothing specific. I always love the conversation like we talked about. The one thing I'll say is, because I've been hearing it from a lot of investors, I want to say the last 3 months, is, yeah, there's just no deals out there. The truth is there are deals out there, right? There are deals to find. You just got to go find them. So put in those offers. Don't be afraid to make lowball offers. If you need help with funding, reach out to us. We can always help you with the funding part. But there's always deals out there. Even right now, at a time where people seem to be running away, in my opinion, that's the best time to go full board, right? When everybody's running away from the fire is typically when I'm running to the fire because there's opportunity there. So if you're sitting there saying to yourself, yeah, listen, real estate right now is not the time, it is the best time because there's going to be a lot of people leaving the game, and it's going to open up a lot of opportunity for us who are prepared for it. So if you're not prepared now, start to get prepared. If you have credit issues, reach out to us. Let's figure out what the credit issues are. Let's get that stuff fixed. If we don't have cash, let's find cash, because I believe there's a big wave of opportunity coming here. And those who are prepared are really going to make out. It's kind of like COVID, right? Everybody wanted to stop during COVID. And those who went full board during COVID, they had so much success in the past few years.
Yeah.
Really, the investors who are like, I'm just going to figure it out during COVID are so thankful that they did. And me being one of the ones that didn't, I was prepared and was still on the fence, having a third kid. I'm like, I wish I would have went harder. So now's the time to get prepared because there's tons of opportunity coming. Let's be one of the ones that are prepared and pulling the trigger on opportunity as opposed to wishing they did.
Yeah, and you definitely want to make sure that you have enough funding for when that happens. When you see that deal and you don't have the funds, that's the sad moment.
It kills me. I see it every week. I get a call every week. Hey, I don't know if you can do anything. I have a deal. It's got to go quick. Maybe credit's an issue. Maybe we can't go fast enough.
Last thing. How long does the process take? So let's say I just I don't know. I just see this house that just hit the market or whatever. It's a wholesale deal or an auction, whatever it is. I found a deal that I don't have the funds for.
Yep.
How long, if I go to you, how long does it take for you to get the funds? Am I able to do this deal or probably not?
Depends on how far you can push out closing. So credit cards typically move quick, right? 14 to 21 days. We have decisions back. You have cards in hand. We can show you how to use those cards to go to closing. The lines of credit, 30 to 45 days. So credit cards definitely move quick. So if it's the right opportunity, we can get you enough on 0% credit cards. We can make that happen all day long in that 14 to 21 day range. The lines of credit are the time consuming. 30 to 45 days to get those in place. So ideally, if we're out there making offers, we want to be chatting, looking at credit, kind of giving you the game plan, let you know what's out there. Because I'd rather you have the money while you're making offers as opposed to when you're under contract.
So what happens if I just got more questions now.
Oh, I like it.
What happens? I don't have a deal right now, but I want to get a deal, right? And I'm a smart person. I'm getting my ducks in a row. So I go and get applied, get 5 credit cards with 0 interest for $100,000. Now I have this $100,000 that I can use, but I don't have a deal.
Yeah.
And I'm sitting with this 500 or 5 business cards for $100,000, which I'm not using. And I don't have a deal for, I don't know, for 6 months.
Mm-hmm.
How would that affect my business credit cards if I do not use them? Would they reduce my amount of line that I have available? Or would it affect me to be able to get another 0% offer?
So great question. Because I get that question all the time. Hey, if we get this money in place and we don't use it, what happens to it? It's not going anywhere. Especially in the first year or two, even if it sits with a 0 balance, ideally I want you to use it, show some activity. Again, just get gas, buy lunch, take your wife to dinner or whatever, and then pay it off next month. Just show some activity. But let's have it ready so that when that opportunity does pop up, we can pounce on it. Find opportunity, right? Like even if you don't have a deal right now, like I mentioned, maybe you can private lend to somebody else. Use some of that money to essentially make some profit. But what's nice about the 0% promotions, if you go a certain period of time and you haven't tapped into it yet, you'll see that those lenders are going to send you new promotions, pushing back the time frame, because again, they want you to use it. It looks good on their balance sheet. So if you don't use it right away, not the end of the world. We're still going to show you, the right way to use it and position yourself. But I'd rather you have it in place and not use it than not have it and need it when you need it.
That's a good advice. Okay, Nick, thank you so much for joining us, and thank you for all of this information. I'm sure it will help a lot of people. And if somebody is looking to get in touch with you, we'll drop a link in the show notes. Just click the link, fill out the application, and somebody will get in touch with you.
I appreciate the time, and thank you. And look forward to creating some value here for your listeners down the line.
Okay, thank you, Nick. That was a masterclass using business credit to scale real estate portfolio. Thank you, Nick, so much for breaking down what can feel like a very confusing topic. So what does it mean for all of the Philadelphia landlords listening right now? It means that relying solely on your personal credit is no longer enough to compete. The money is out there, but you have to actively build the vehicle, your business credit, to get access for the quick rehabs, gap funding, and carrying cost. The now what is simple. Start treating your real estate holdings like a real business today. Separate your personal and business financing. Focus on establishing your business credit profile and stop confusing personal debt with business capital. If you need help with your current portfolio or just want to run numbers on your next investment, reach out to our sponsor, TrustArt Realty. Go to trustartrealty.com and schedule a live session. If you would like to connect with Nick, the link is in the show notes. So just fill out a quick form and they will get in touch with you. Do not forget to follow us on all the social at Philly Landlord Guy. Thanks for tuning in, and I'll catch you next time.